All right. Not too much change today. SPY was only up 0.12%, and we did get the CPI data, and we're still closing about where we closed yesterday, so relatively flat on the day. And this is likely because we have PPI data tomorrow, so the market is still pausing here, deciding which direction it wants to go. So since there's not too much new to go over, today let's look at XLF and the US 10-year. And if we jump over to XLF, you can see that we are above the 200 daily moving average, and the 20 daily moving average is now rising up, which is a positive slope. And the financials are trying to break out of this previous high after putting in a higher low off of that 200 daily moving average. So no matter what narratives come out about the data, make sure you're following your charts. And right now the financials look like they're trying to break out with a higher high after a higher low, which is obviously bullish, and that is going to be very bullish for SPY. And then looking at the US 10-year yields, you can see after the CPI data, we had a spike, but that was instantly crushed, and we're sitting right on top of the 20 daily moving average, which is now negatively sloping. So if we break below it, this could be a lower high rejection, and we could see the 10-year yield start to cool down. So just be sure you're following your charts and not the narratives, because even though you're reading the news, you have no idea if it's biased. Make sure you are looking at your charts and you understand how these impact the stock market. So jumping back over to SPY, we still have that resistance we need to break through right around 449, and that's also a gap close. And if we break through that, we're looking for the price target at the gap fill at 455. This is still a bull trend while price action's above 442, and we're not getting bearish unless price action tells us to, which requires the break below critical support at 442. Now, another thing I want you to pay attention to is that SPY has gone absolutely nowhere for 3 months now, because on June 15th, we were trading right around 442, and that's essentially where we are today. Usually when the market goes absolutely nowhere for over 3 months, it is possible. It's really just going sideways and building out a wedge of consolidation, which means even if we break support, we may not go too much lower before we just ping pong around in this wedge and then break out at a later date, which would likely resume the bull trend. So these are all just ideas to pay attention to, because I know there is a lot of noise when we get these economic data releases, but you need to be sure you're following your chart and your trade plan is built around critical support and resistance levels. On the NASDAQ 100 triple Qs, we were up 0.38% today, and the triple Qs are retesting this breakout of the resistance trend line, which was that support right around 372. And as you can see, we closed right on top of the 5 EMA, but we failed to close above that resistance just above 375. So just like SPY, we really didn't learn anything new today. We still have the bull trend, and we still have price action above critical support, which on the triple Qs is that support level at 370. And I'm still favoring the bulls while we have this bull trend and above critical support. If we break the critical support at 370, I think there's a good chance we come back to 355. However, I'm waiting for price action to break support. That way it's unbiased to assume we're going lower, because if you assume we're going lower right now, you're assuming we're going lower within a bull trend, and I just don't understand why that's a good idea. Follow the highest probability chance, and in a bull trend, the highest probability chance is that we likely continue to push higher. And the only way we're out of that scenario is if we lose critical support and lose this bull trend, so wait for price action to prove it. I consider critical resistance the previous daily high at 378, because if we break that, we then have the higher low, higher high, and that means we're likely going straight to 387. So 378 is your critical resistance, and 370 is your critical support. Once we break that range, we're going to know the next leg in this market. Just like SPY, we've gone absolutely nowhere all the way back since the middle of June. The triple Qs were trading right around 371, and today we're trading right around 374. So we've really gone absolutely nowhere for over 3 months, which means we're in a period of consolidation and about to see a next major move in this market once we get a break of this range. On the Dow Jones, we were down 0.19% today, and the Dow Jones is still closing above this critical support at 346. And if we break this support, it could look like another lower high, and the confirmation of the lower high would be the break to a lower low below 344. So critical support in the Dow on the daily chart will be right around 344, and the critical resistance is up here just below 350. Once we break out of that range, whether it's the break of resistance or the break of support, we're likely going to know the next leg in this market. And look at the Dow Jones Bollinger Bands, and you can see they're getting very squeezed. So just like the rest of the indices, we have gone absolutely nowhere since the middle of June, meaning if you bought the high on June 15th and just held, you really haven't made any money in 3 months now. This is the benefit of being a trader, because our trading accounts continue to move higher even though the market is just going sideways. On the Russell 2000 IWM ETF, we were down 0.66% today, and we finally got a close down below 183, but we are still sitting right around this support zone, which means if we continue lower and with the bear trend, we've lost critical support with a bear trend, which means we're likely going down to fill the gap at 176. Now, usually when you break a critical level, you need to see follow through, which means you need to break down below the low of today's candle, which is going to require a breakdown below 182.39. There's always the possibility of double bottoms, but usually when you break down and you start hitting stop losses, you get high volume selling. So if you start to get that high volume selling below support, look out below because we're likely going down towards 176 as these Bollinger Bands continue to expand. The critical resistance is still up here right around 188, and if at any point we break 188, we've likely hit the bottom and we're going higher towards 195. On the ARKK ETF, we were down 1.32% today, and ARKK is bouncing between this support zone at 43 and this critical resistance at 44.5. Now keep in mind, ARKK has two major gap fills. One is just below 49 and one is just below 36. So when we break out of this range, whether it be higher or lower, we are likely going to see a very large move in this market. The bulls need to break 44.5 and the bears need to start breaking down below 43 in this previous high right around 42. On the VIX, we were down 5.41% today with a bearish engulfing candle after the CPI data. So this really just continues to tell us there's still no fear in this market. And as the VIX is heading lower, we expect to see the stock market heading higher. If the VIX closes above 15, that's obviously a trend shift, and that means fear is back into the market. But right now we just see the VIX rejecting 15 and heading lower. On Bitcoin, we're currently up just over 26,000 after that strong bounce off of the strong support at 25,000. That is strong support, meaning if we break it, it's incredibly bearish, and I expect to see a straight line flush to 22,000. But if we hold this support and break 28,000, I think the bottom is in and we're going back into the bull market. So we're going to know very soon where Bitcoin is going next, whether it breaks the range at the high at 28,000 or the low at 25,000. On Tesla stock, we were up 1.43% today, and Tesla did bounce off that support at 266, but still has not broken and closed above the resistance above 274. Above 274, I think we go straight to 290 and then 295. And if we break the support at 266, I think we have elevated risk of filling the gap down here at 256. If we go down to 256 and hold it as support, it's still possible that's a higher low, and then we could still go higher towards 290. So manage your risk around the support at 266 and the resistance just above 274. And whichever one of those levels breaks first is likely telling you whether we're going to 290 or 256 next. On Apple stock, we were down 1.19%, and Apple is now in the critical support zone at 174, meaning if we break too much lower, we're likely going down to fill the gap at 167. However, we need to see it break 174 because this is also a possible place to find buyers, because that is where we found buyers back in August. So 174 is very critical support. So if we bounce from it, then we could go all the way back up to fill the gap above 181. Below 174, we're looking for 167. And if we bounce from 174, we could go all the way back up to 181.5. So jumping back over to the S&P 500, tomorrow we do have PPI data, and today we largely went absolutely nowhere, but we still have bullish financials, and we're starting to see the 10-year yields cooling down, so we're not seeing the market panicking from the CPI data. This is important to follow your charts and not any of the narratives out there, because the charts do all the talking and you only can trade the price on the chart. Do not worry about what other people think the market is going to do. Let the price action do all the talking and make sure your plan is ready for either scenario. We couldn't care less as traders if the market goes higher or lower. We simply want to be on the right side of the trade. So focus on being on the right side of the trade and not just following what the majority think, because the majority are typically wrong. So don't forget, you can still take advantage of the BANC Labor Day sale. And if you're an existing BANC member, this is the best time to take advantage of the annual discount, where you can save an additional 10% off the already discounted annual plan. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.